I'm Ari Redbord, and this is TRM Talks. I am Global Head of Policy at TRM Labs. At TRM, we provide blockchain intelligence software to support law enforcement investigations and to help financial institutions and cryptocurrency businesses mitigate financial crime risk within the emerging digital asset economy. Prior to joining TRM, I spent 15 years in the U.S. federal government, first as a prosecutor at the Department of Justice, and then as a Treasury Department official, where I worked to safeguard the financial system against terrorist financiers, weapons of mass destruction proliferators, drug kingpins, and other rogue actors. On TRM Talks, I sit down with business leaders, policymakers, investigators, and friends from across the crypto ecosystem who are working to build a safer financial system. Today, I sit down with Ronit Ghose, head of Citi's Future of Finance and the author of Future Money. But first, inside the lab, where I share data-driven insights from our blockchain intelligence team. We've had some of the best cryptocurrency investigators in the world join us on TRM Talks. And at TRM, we are constantly innovating to build the very best tool for investigators. Here's an example. When investigating financial crime on blockchains, one of the key steps is finding indirect or multi-hop connections between a suspicious wallet and a virtual asset service provider, a VASP, essentially a cryptocurrency exchange. By following the trail of funds to these entities, investigators can link wallet addresses to real-world informations, such as in accounts that have undergone KYC verification. TRM makes this process much easier and more thorough. Instead of just showing the most obvious connection between a wallet and an exchange, TRM maps out every possible path the funds might take. Whether the funds passed through 2 transactions or 10, TRM lets investigators see exactly where the money went, even if it's converted into different forms along the way. For instance, if someone reports stolen funds and provides the suspect's wallet address, TRM users can quickly trace the wallet's activity, like its transactions with exchanges. Investigators can choose to focus on a specific exchange and see all the transaction paths, whether it's a direct 2-step route or a longer series of transfers designed to hide the money's origin. By showing these connections in an easy-to-read, time-ordered way, TRM eliminates the guesswork and saves time, letting investigators focus on solving the case faster. And now, I sit down with Ronit Ghose. Ronit, it is awesome to have you. I had the absolute pleasure and honor maybe a year or so ago of being on your podcast, The Future of Finance, The Future of Money, and really looking forward to the conversation today.
Thank you for having me. It's a pleasure to be here. And you came in my pod, I'm now on your pod, and in between, I wrote a book in which you featured.
And it's a huge honor, and it sits here all the time on my desk.
Look at that.
So I've been obviously reading it, studying it, and I'm really excited to dig into it in a moment. But you really have a unique role in the space, and I would love to talk a little bit more about that and about your journey to the future of money, really.
So I entered the world of finance almost 30 years ago. I was in London, just come out of college. I was actually working in the House of Commons, the Parliament in the UK as a research assistant. I wasn't really sure in my early 20s which way my career would go. I was very interested in current affairs, international affairs, applied to a job. In those days, we read newspapers, print newspapers, and job ads would appear in the newspapers. We would send our applications in. Real people would scan those applications, and then most of them would be ignored. And somehow, having been turned down for most of my job applications, this one replied. I ended up working in the House of Commons as the bag carrier and ghostwriter for a former UK Prime Minister. And some point I was like, okay, this is really cool, but I need to make some money. And finance was booming at the time in London. London was emerging as the global capital of financial services with New York, and definitely the capital of Europe. And the terrible acronym EMEA, Europe, Middle East, Africa, was the capital of EMEA. And that's how I fell into it. I was hired into investment banking research in the period of IPOs. We used to have IPOs in the UK at those times. I think they only happen in places like India now and the US sometimes. But there was a big boom of IPOs. There were a lot of stock market companies new companies coming to the stock market. These were old 19th century mutuals or building societies. And those were the future of finance in the 1800s, because the big trend in the 1800s is industrialization, urbanization, and new financial companies get built to serve those, changing times and new communities, urban communities. Fast forward, it's the post-financial crisis era. Banking's got a bit more boring, and I'm looking around the world and seeing what's happening in China, and it's like 1990s or the 1830s in the UK, 1830s to 1850s or something like that. The future was being built in the UK, the railways, for example, in England in the 1830s. The future was being built. And I was looking at what was happening in China in the early part of this century and going, wow, the future is being built here. A bit like in Japan in the 70s or 80s. And it was like that. And I began to do a lot of work, again, from a research perspective. I was lucky enough to have a great team who, at least one of whom, was a native Chinese person. And with their help, we were very early in English, writing about Alibaba and Tencent and Alipay and the digital revolution in China. And I really went down that rabbit hole and then ended up doing this recording from Dubai, and ended up sort of unraveling that thread and saying, I want to be part of the future. And the future is it's not that the UK and the US are not important. I always say to people, the US is hugely, hugely important, period. Economically, financially, technologically, geopolitically, but the center of gravity was moving, and it was moving east. And I wanted to be part of that. And that's been my story in a few minutes, but there's a lot to unravel there.
It's an amazing story. Let me ask you, right? You're doing this at Citi essentially,
Yeah.
or a wing of Citi, really
Yeah.
running a think tank slash startup at really one of the largest, most important financial institutions in the world. How do you do that?
So I was part of research, investment bank research from 1997 to 2019, 2020. And I'd been since 2009, our global head of banks research. And then eventually, when fintech became a thing, fintech research. And really through the lens of, or the prism of Hong Kong, went down the crypto rabbit hole. And of course, we don't say the C word in banks, we say digital assets. So just to show we're sophisticated. So went down the digital asset rabbit hole from 2015, 16 onwards through Hong Kong, and we can come back to that. And what I was doing was increasingly more big picture, thematic, trend based, and future based, and not really is the share price of this bank going up or down. And so when they created this new unit, it's called Citi Insights. They said, listen, we're setting up a think tank. I hummed and hawed about it. And I said, do you want the role or are we going to give it to someone else? I was like, okay. And so it's a great seat. It's a go anywhere, look at anything. As long as I can justify it, obviously, it's got to be interesting to my clients. They allow me freedom to do things like write books and sit on advisory boards. And my day job is writing research and talking about the future where the money is going. And they all kind of interconnect, because we don't want to just do desktop research. We want to have fundamental rigor in terms of our analysis, but we want to combine that with real life stories. We want to combine it with things that are relevant. So it has to be relevant research, and it's got to be something that's about the future, and it's something that's also provable now and that can be value added for, our clients. My talking partners will include central banks. 5 years ago, when central banks were beginning to look at CBDCs properly, or ministries of finance, I engaged in a lot of conversations, did a lot of work on CBDCs. When people are thinking strategically about it, if payment companies or bank C-suites are looking at the future of payments, we've done research on that. And so it has to be something relevant. So that's kind of what we do.
It is such a cool role. How has your role evolved over the last, several years? You mentioned talking about payment services like Alibaba and WePay, and up to now where we are talking about digital assets and blockchains. And how has your thinking evolved over the last few years since you've been in this role?
Sure. So the thinking has evolved, but the practicality of day-to-day life has evolved. When finance in the 1990s, in the mid 1990s, or enterprise or corporate life was very different. And we forget how different it was. Communication channels were totally different. A typical sort of setup was there'd be a managing director or a senior person in an office on his own or her own. There'd be a secretary sitting outside with a fax machine, and there'd be a couple of juniors outside. And that was the world of banking I started. Luckily, we were a relatively small bank in London. We were very big in New York. This is a bank that became part of Citi through acquisition. And I had my own office, but there was, usually sat outside, like in the bullpen. And it was a very different world. My first value add, I always joke to particularly younger colleagues or friends, is literally my first value add was I went and bought a phone. It wasn't the smartphone, it was a Nokia phone. And when my boss would come out of meetings, a brilliant, brilliant, smart man, but he left Harvard Business School in the 1970s. He used a scientific calculator to do all his calculations and hard coded into Lotus and then Excel his numbers. And he didn't have a mobile phone. He used to run to payphones and call the office and shout down the payphone to the trading floor. It's a great meeting, buy the stock, or the opposite. Also, regulations back in the mid 90s are very different to today. Now you couldn't do that. Now you have to publish a note. They have to go through compliance, and then it would pop up on your trader's desk at the same time as on the desk of a hedge fund or something else. Then you could just call the trading fellows. Great meeting, stocks going up, buy now. And and I was like, yeah, this is probably not best practice, running to a payphone. So my first value add in the world of investment banking research was I went and bought a Nokia phone and would dial the office. Now, obviously, world's moved on since then, and we've gone from back in the mid 90s, late 90s, just providing data to providing analysis. And the same thing you could say is looking at the industry as a whole. If you went back and looked at jobs, if you look at the Bureau of Labor Statistics data for the US, job category of financial manager slash analyst didn't exist in their data series in the 1950s and 60s. They had a category called bookkeeping and accounting because finance jobs in the 50s and 60s, so in our grandparents, when they were young, it was adding up things. Literally, that's where all the brain power went. There were no computers. Computers were women who did complicated additions. Not always women, but typically women. You've seen the NASA movie, right? Hidden Figures. It was, mainframe computers arrived at NASA and at big banks, the Department of Defense, late 50s, early 60s. And then you fast forward to this explosion of data, compute power, and connectivity, right? Where you just got an abundance of all of this data, connectivity, compute. And that is just continuing to take off. And I'm sure at some point we'll talk about AI, but AI is just the latest installation of Gen AI in that trend of just data exploding. So the nature of work changes and the nature of what we do changes.
You're talking about this explosion of data and this explosion of technology. You mentioned AI. How do those sort of and those are the technologies of the moment, right? But I think I love your perspective that they're only the technologies of the moment, right? Technology continues to evolve. Talk a little bit about how you're looking at both of those things today in the larger picture.
I first wrote a report about AI and banking or AI and finance in 2018. It was called the ABC of banking, and the A was for AI and the B was blockchain, etc. And it's interesting. Mentions of AI in SEC filings, corporate filings, had just begun to pick up. I think there are some specific applications that are getting quite widespread in 2024 at most big banks and fintechs and crypto firms and others. And that's in the coding side, in actual the tech side, code generation, code documentation, revising old code, recreating code, creating new code, huge use cases across big firms and small firms. Where smaller firms or younger firms or founder-run firms, because a lot of this is about founder-run versus non-founder-run firms, where they're taking greater risks or being more entrepreneurial is, how can this change business models? And how can it change how we deal with clients? And they're the incumbents of the larger firms who are a bit slower. So I think AI is going to be quite profound because you can already see some of the fintechs. None of these they're not often young. They're like 10, 15 years old, these fintechs, or even older, but they're younger than the banks. And they're taking some really interesting decisions about how do I do headcount? How do I staff up? How do I do HR? Or how do I do marketing? And they're using Gen AI rather than using off the shelf solutions. And this is like a really interesting time. I think, the Gartner hype cycle, we're going to have a trough of disillusion. Maybe we're already slipping into it, but I think 2025, there will be a trough of disillusionment, particularly in bigger companies going, hey, we threw a lot of money at consultants. We had a lot of expert speakers come in, and that trough of disillusionment's coming because there's the innovation or the invention, and then there's the industrialization. And even though that gap is shrinking, it doesn't happen overnight. It doesn't happen overnight at the economy level. It takes time, right? Yes, everything is getting implemented faster. Like in the 1990s, the speed at which we went from consumer internet, say Netscape, to actually this becoming a big thing across enterprise world, that was many, many years. Now that's going to be shortened, but there's still a time lapse. And there's also the change because when you look at this, people will say this is not about just the technology. It's about how do I integrate the technology, which is a cultural and business model question. And culture, regulation, business models move much slower than technology and software. And when it comes to money and finance, the regulators really matter. And this is obviously the segue to digital assets, which is my tech friends who are pure technologists will come and say, what? This is just stupid. Or why doesn't the bank do it? Or the regulators doesn't get it. And you're like, yeah, this is not a ride hailing app. This is about money. And usually on the digital asset or crypto side, the problems all come because there just isn't the rule book, because the rule book moves slow. And now in the US, famously, you have lots and lots of lawyers and lots of regulators. So it's even more complex. But even in countries like the UAE, where I'm based, where often people say, oh, you guys are so far ahead, your policymakers. And we have a lot of regulators here as well. Not as many as the US, but there are lots of different ones.
You have the only crypto-only regulator at VARA, Virtual Asset Regulatory Authority, which has done a really good job of at least sort of informing the public as to what the rules of the road are. Where is this headed when it comes to digital assets, cryptocurrencies? Are they going to be part of a broader ecosystem that includes fiat currencies, that even includes cash, stablecoins, CBDCs?
I think digital currencies have a really important role to play. Crypto is part of the existing society. And I don't think if our existing society collapses, it's the new money of the future. Now, let me explain why I think it has a role. You probably heard this stat, and someone's going to fact check me on this. A tenth, apparently, of all gold in the world is not sitting in Fort Knox. It's sitting it's around the ears and necks of Indian women. It's sitting in their safe deposit boxes. It's sitting at home in the bank. Why is there so much gold in India? Because you can self-custody gold. It has value. It's intergenerational value. It's somewhat autonomous. It's somewhat transferable, not quite as easily as crypto, but you can move it cross-border. You can move it between towns and villages. And in the digital world, just like wearing gold jewelry, what's the way to get a technological equivalent? It's cryptocurrency. It's a cryptographic solution to the copy-paste problem, to having a uniqueness. And I said it at a recent conference in Singapore. I think I went a bit overboard and said it was a fundamental human right, but I think it's probably not far off that. We have a right to digital privacy. Just because we want to keep things private doesn't make us a bad guy. And we're getting to a surveillance stage now where almost the kind of assumption is if you're hiding something, that means it's bad. I'm not saying you should break rules. I'm not saying that, you should go around OFAC or you should go around, whatever the rules in your country are. Of course, there's a reason why those rules exist. And we can then debate exactly what the rules should be. But do we have a right to privacy? Why does everyone need to know everything? Similarly for finance, why can't I have something that's mine? I will report it and declare it. Then you can fine me and jail me if I'm doing it wrong. But I think there's a basic societal or human need for privacy. And in the digital world, I think crypto is a really good answer to that. But does that mean it becomes the single way of storing value, moving value, and paying for things, aka money? No. I think money in the future, I always use the example of language that we already touched upon. In this kind of mythical 1950s to 70s America, I think everyone just spoke one language, right? I don't know. That's what all the TV programs tell me. And now in America, you have a lot of people, particularly in California and others, southern states, that speak Spanish as their native language. Here in Dubai, we have people who speak a vast range of languages as their mother tongue or their native language. But in public, it's English or Arabic in terms of government. In the office, and typically here, it's usually English. That's everyone's second language. And you don't have to have one language. There are hundreds of languages spoken in Dubai. There are hundreds of languages spoken in New York City. There's one major language usually, or two in Dubai. So for me, the future, you can have the banking system, but that you can think of as your whatever, one of those three languages. You can have blockchain-based payments. And within that, there could be stable coins that are linked to the fiat currency of your country. You could have coins that are linked to assets that I think of not as money, but as assets, typically crypto. And then you can have all kinds of made up nonsense. There are 2 million crypto coins, currencies out there, right?
Oh, at least the idea of languages and the way we transact and interact with each other and communicate as an analogy for the financial system, having different choice. I think that's a really extraordinary model analogy for really what we're building in terms of the future of money. So speaking of the future of money, you decided to write a book about it, having talked about it for really much of your professional life. It's really fabulous. And what you do here is you tell the story of the builders to a large extent, which I think is really interesting, as opposed to just the focus on the technology or the history. You're talking a lot about the people who are building. Why'd you write this? And why'd you write it the way you did?
I'll answer those two questions by telling you a story. At some point in the year 2022, I think it was 2022, I got sent a direct message on LinkedIn saying, I think you should write a book and we'll publish it. And I was like, yeah, right. And I considered it to be spam. So I ignored it. And so kids always send the follow up, right? Because she did. She sent me a follow up and she sent me another message. And I was like, oh, okay. Let me look this person up, find out who. I said, oh, this is actually a proper publishing house in London. Let's look into it. And so I replied to her and said, sorry, I didn't reply to your initial message, but I'm going to be back in London. I'm going to go to Waterstones on Piccadilly, one of my favorite bookshops. I'll be there anyway. You can meet me for a coffee. And she came along and she pitched and she told me, listen, you've been writing about finance for 20 plus years. I think you should write a book. You'll be great at it. And like many middle-aged guys, I was like, sucker for flattery. So that usually works. And I said, oh, okay. And then I was like, listen, I don't want to write a serious book. I spent 20 years writing financial analysis. I don't want to write a book about Basel capital ratios or net interest margins, or I want to write a book about the story behind the story, because things get built, that 0 to 1, that cliche, but a very, very, very good way of expressing it. That 0 to 1 moment gets built by a mix of crazy people who are also unbelievably competent, but they are crazy. And because they have these ambitions, because to build something new, you got to say, listen, the way we do something that millions of people do, where there's billions of value or even trillions of value, is wrong. I can do it better. And it takes chutzpah, it takes guts, it takes a bit of craziness. And those stories often get underplayed in financial research. And sometimes it gets covered in the media, but no disrespect to my friends in the media, apart from one or two outlets, most of them don't really understand the details of the plumbing. So I wanted to combine big trends, big themes with details of the plumbing and the really colorful stories. I wrote the book because I wanted to write about, like, there's a story about, it's a friend of mine who lives in Dubai, a fintech in Pakistan. Like I said, what's the big deal? The big deal is he had never worked in Pakistan. He was living in New York City. He'd grown up in Dubai. Sitting in New York City, decided to build a fintech and then implemented it during COVID. That's kind of crazy to leave your Wall Street job to go and do that. And he was inspired partly by the story of Sergio, who built a unicorn and hopefully a decacorn in Brazil. And they were both trying to solve the problem of credit in those countries. In Pakistan, the availability of credit, particularly for low-income workers and small businesses, formal credit is very, very poor. Sergio had never been to Brazil. Sergio was also sitting in New York City, was date night with Sylvia. Now they're married, but this is one of the, I think, first or early dates. And Sylvia was saying, yeah, I come from Brazil and the banking system doesn't work. And like, how many guys then say, I'll go and fix it for you? I mean, you can say that as bravado. He actually got on a plane to Sao Paulo and built a fintech, and bravo to these people. And that's what I wrote about in the book.
It's extraordinary on so many levels, and there are so many themes throughout. I'm sure we could look back and think about how have we protected the financial system for a really long time, and where does compliance and anti-financial crime fit in to the way you think about the future of money?
So part of the reason I wrote about you and TRM, we'd met, but I've also had your founders in my house in Dubai. And I love digging into people I meet. And oftentimes people say, look, in this case, crypto, but any new thing, don't want to be involved in it because bad guys are doing it. And yeah, there are bad actors, illicit actors involved in crypto and in other spaces. And what TRM is doing and what other organizations like yourself and the agencies who've now got up to speed it in the last few years in crypto, what's really encouraging is rather than saying this is all bad, we're going to try to understand this and get under the hood and say, hey, we can actually track this. It's not anonymous, it's pseudonymous. And a little bit of detective work, combining, I guess, science and sociology, we can track these, bad actors. And I like that we're not just throwing everything like the baby out with the bathwater. Listen, I'm speaking as an analyst, as an individual now, not representing any institutions, a health warning about what I'm saying. I think there are better ways to do anti-money laundering. There are better ways to do compliance than we're doing it now. I don't have the answers. I wish I did. I'm not the specialist or domain expert in this area, but there's got to be better ways of doing this. And what you guys are doing is hopefully part of that journey. And that's why I wrote about it, because just throwing bodies at this problem and people, it's almost a very Stakhanovite Soviet thing, right? Just throw in more inputs. Let's get smarter about this. And everything else we do, we talk about innovation, we talk about being smart. This is not a plea to say, let's not track bad actors, let's ignore bad actors. Let's find a way to evolve and continue to build a financial system, digital and non-digital, in a way that doesn't really put all the burden on ordinary people.
Now, it's really well said. And you mentioned Esteban and Rahul, our co-founders, and they're two of the smartest, most humble guys that I've ever known. They're the reason I joined this company when we were about 8 people 4 years ago. But they're technologists. And I think what they saw here is they love this technology. They were, as you mentioned in your book, and not a lot of people know this story, again, because they are so humble, they set out to build a blockchain-based game, a sort of Pokemon Go for blockchains, right? And what they realized is, and what their friends realized and financial institutions realized that saw this, is that they had built an extraordinary analytics tool to build that game and realized they really had something there. The reason I say that is I think that what I talk about really every day, all day, is that they're technology solutions. If you're worried about national security threats, terrorist financing, sanctions, North Korea, there are technology solutions to allow lawful users a degree of privacy, going back to your initial point around privacy versus security, but yet stop bad actors from using these platforms. And, when I was a prosecutor, I did cases involving bulk cash smuggling and networks of hawalas and shell companies, right? You can't trace those things. There's no TRM for them. So really point well taken. And I've loved every minute of this. And I think it's in large part because you are so passionate about what you're doing. What do you do when you're not thinking about the history of finance and building and where we are now? What do you do for fun? What do you do when you're not traveling the world?
Planning my travel for private purposes. So right now, my kids, my eldest and my youngest, have been on my case because as of 2 weeks ago, we hadn't planned our Christmas end of year break. So they were on my case and we were trying to work out where to go, whether it's going to be Zanzibar or somewhere else. Like Zanzibar is not a long flight from here. But in the end, we pivoted. We're going down to the Straits of Malacca, or the Strait of Malacca. And there's several destinations we're going to stop on along the ways. And again, famous, one of the major international trade routes. I'm not going there to check out trade, but part of the reason I've chosen to book flights and hotels in places like Georgetown and Kuala Lumpur and Singapore for December for family reasons is there's a whole history of, from the 18th century to the 20th century, of this incredible trade routes there. So yeah, even in my spare time, but that's with my family.
I love the way that you have taken this passion and life's work and turned it into an adventure, and an adventure with your family. To me, that's like all we have in life at the end of the day are those opportunities. And I love that you're seizing them. This was an extraordinary conversation. Ronit, thank you so much for joining TRM Talks.
Thank you so much for having me.
That was really an extraordinary conversation and very different than I feel like when we're talking pure compliance, pure investigations, law enforcement, regulatory. Really what Ronit provided was a historic perspective that, yes, AI, digital assets are what we're talking about right now when it comes to the future of money, but there's a long history of this going back thousands of years. And we're at this very specific moment, but it's going to continue to evolve. And that's the nature of technology. And that's the nature of globalization. What I also was just so struck by was that the way he has such a passion for this, but it's also in his life, in the travels that he does, in the things that he studies, reads, and shares with his family. But I really just come back to this idea that we are building a safer financial system, but it's very much a journey. It's a marathon, not a sprint. And you can go back looking thousands of years at the beginning of that. And then I was also struck by how interesting a companion piece this is for the conversation with Ellen Feingold from the Smithsonian, who is the director of their Numismatics, the study of money department, because this really is the history of finance. It's the history of money. And to understand where we are today and understand the future, you have to understand, the competition amongst railway companies in London in the 19th century. You have to understand the fact that, Romans were buying, Indian silk. So really just, I love the connectivity around the history to the modern age and really tying that into what the future of finance can look like, what role blockchain technology will play in that. Next, on TRM Talks, I sit down with Circle's Caroline Hill. If you love the show, leave a review wherever you're listening to it. And follow us on LinkedIn to get the latest news on crypto regulation, compliance, and investigations.
TRM Talks is brought to you by TRM Labs, the leading provider of blockchain intelligence and anti-money laundering software. This episode was produced in partnership with Voltage Productions. The music for this show was provided by Ecolix.
Now, let's get back to building.